I did want to start with that kind of old thinking around gold and the reason for owning it as an inflation hedge. And then therefore, that makes the case for the producers, right? Because you get to leverage up a little bit more on it. Is that disconnect? Is there still a connection between those two things, or is it over?
No, I think absolutely. When you look and see where we've come, and if you look back to the turn of the century and look at gold price is effectively the value of paper currency, and particularly the US dollar price of gold. And right now we see all the currencies weakening against the gold price and have been doing so for 2 decades now. So absolutely that connection is still intact.
Mark, really curious to see what signs of accelerating inflation that you see as well in terms of input price. If you think of some of the mining companies and then the impact on how you can pass that on to the consumer.
So, Tyler, as you know, we are a price taker. So we've got to sharpen our pencil as far as efficiencies and operating effectiveness goes. We can't pass on anything. It's what it is. The gold industry at the moment is in good shape because of the gold price. But again, it's a long-term game. The question mark over the gold industry is, are we investing enough in our own future as an industry to ensure that we are there for times of crises? And, there's no better example than if you look back in the global financial crisis and the performance of gold and how it should have supported the investment portfolios. Certainly this time around, it has. And I think there's a lot of wishful thinking in the market right now as we try and move out of this unprecedented crisis that we've managed since March last year. And everyone wants it to be better, and everyone believes it's going to just be transitory. But I think there's been a lot done and a lot of money printed, and there's been a lot of damage across the global economy, which still has to materialize.
The story, of course, for your industry, one you know very well, is that the easy to mine gold was mined a long time ago. Your costs have been accelerating, and there's signs that we will see higher costs continuing for you. What is as you say, you're sharpening your pencil. What's the best way to get more efficient, Mark? And where does M&A fit into that for you? What are the efficiencies you can find through a transaction, and how much of it is simply going to be straight old-fashioned cost cutting and operational, efficiency internally?
So efficiency is important, and our move to be more ESG cognizant is important. And with that, for the first time, the industry is really focused on technology, and those all help. But there's nothing better than the quality of one's assets, Amanda. The better your grade, the lower your cost per ounce. You might have unit costs higher per ton, but the cost per ounce is driven by the quality of the ore you mine, because that's really our revenue stream. And as you know, Barrick is very focused on quality of assets, tier one assets. That's assets that are in the bottom half of the cost curve and produce more than 500,000 ounces a year for more than 10 years.
Mark, it's interesting. The Denver Gold Forum that is underway traditionally has been a breeding ground for further consolidation and M&A deals. Are you looking at further consolidation in the industry?
So, Tyler, we're always looking. The problem is to find the right one that does create value and doesn't just make you larger as a producer. And in line with the Denver Gold Forum is a sort of junior forum, which really allows young startup companies, explorers, to present their projects. So that's always a very interesting sort of breeding ground for transactions. So this is a time traditionally, and it's the first time we've sort of got half in-person engagement, but it is bringing the industry back to life, and we're excited about the opportunities. The one thing the industry misses, and it needs to do, and Barrick, it's one of my big drivers, is is to make sure that we invest organically in our future, because we really haven't replaced the gold we've mined with similar quality assets for 2 decades now.
You are obviously leading through a global pandemic. There are perhaps some signs of daylight, but there continue to be real disruptions. What are you seeing in your own operations in terms of being able to deploy your people? And what's your vaccination policy plan? Will you require vaccinations for some of your employees?
Yeah, so we are actively managing this pandemic. I grew up in Africa. I understand very well virus pandemics. And we started even before anyone had introduced protocols. We already had protocols in place. We are encouraging, and in some countries like Canada, we've mandated vaccines. You've got to look at each environment. All our mines are busy with vaccine programs, all our operations. Africa's a little behind because of the access to vaccines, but at the same time, we are working with our host countries to ensure that we access as much of the various approved vaccines as we can to support their programs. And so if you look at Argentina and Chile, we're way up into the 80% in the first vaccine, just a little behind that now on the second vaccine. Dominican Republic is at 90%. America is behind everyone, and that's a real pity because it was so far ahead initially. But we're seeing that process pick up now, and we are managing the protocols more stringently until such time as we get comfortable with the level of vaccination. Canada, I think in our corporate office, we've got 2 people that haven't been vaccinated. And as I said, down across in Papua New Guinea, we are now really picking up that because we've got access to vaccines, and the same goes for all our African sites. And Saudi Arabia is very high, the percentage is very high, again, above the 80s.